Hey everybody, how you doing? It's Bruce here, Stock Markets with Bruce. Thank you all of you out there to help my channel hit 50,000 subscribers. Unbelievable. February the 11th, 2021, we did it. And that's in less than a month. We were down to like 1,200 subscribers when we had a run here. We're now at 50,000. Thank you. I got a video today. I want to talk to you about what is going to make GameStop go up in price. People are asking me all the time, Bruce, the shares were at 10, 15, 20 bucks back at the early part of the year. Then they took a shot and went all the way up to that 400 something mark. And now they've come all the way back to this $50 range. One, is this the bottom? Two, will they go up from here? Three, why? How far? I'll try to cover it all best I can. First of all, can they go lower? Of course they can. All shares can fluctuate in price. There's no rule saying that a stock can't go up or down. The theory is that reality, I guess, is that the GameStop could still back off. But I have to say, the last 2 or 3 days, there's been a lot of resistance to the share price. Once we reach this 50 range, 45 range, seems to be a lot of buying coming in, and the selling has kind of run out of gas. I have a suspicion that because there once were 70 million shares shorted in the company, and now there are only 21 million shares short in the company, that's almost 50 million shares that have been bought back at probably prices going all the way up to the 400 level and plus, and then all the way back down. And so a lot of shorters have long ago left the market. There's still 21 million theoretically short. Only 50 million can trade as far as free trading shares go. And I bet you that of those 50 million, only about 10 million are floating around out there that might be available, but they're not for sale in any great numbers here at 50. So technically speaking, the stock may have run out of supply, and it wouldn't surprise me if any kind of an announcement from the company that was being made would that generate a couple of million shares of buying interest where people maybe want to average down who are still holding from the highs, or folks want to take a new position. That kind of a volume surge coming into the stock in one trading day could move the market 20 bucks a share. There's just no resistance, I don't think, of any significance. Now, once you get to 75 bucks, $80 a share, yeah, you're going to start running into resistance because there are people making money again. A lot of those folks have been buying between 45 and 60 who've been nibbling away at it for the last 4 or 5 days. Of course, they're now going to be tempted. Should I take a profit? Maybe they will. But what would make the stock do it? What would make the stock take a pop? Is it going to be a short squeeze? I don't think so. I don't think that is the catalyst that anyone should count on. I think what you're going to look for is the what I'm going to call the Ryan Cohen effect. I'm going to just use that as a term. Ryan Cohen is the gentleman that bought 13% of GameStop back in September, October, November, December, in that range. He picked up about 9 million shares, spent 76 million of his own money, bought stock, stopped buying at around the $16 mark, and has now been added to the board of directors. He's brought 2 other individuals with him that were with him with the Chewy company, online pet retail company, brought them in on the board, and he is spearheading with the company's blessing the conversion of GameStop from a brick and mortar company to an online e-commerce company. I think what we're going to see here in the next year or two is GameStop will mirror what Chewy is for the pet owner out there. If you guys know anyone that's a pet owner, you know how much a pet means to a family. I can tell you that the Chewy company, the online company, has built a loyal following of customers who swear by Chewy to buy whatever they want online through that company because how much they care about pets. They're a very pet-friendly corporation. They're not as sterile as, say, Amazon or other websites. It's a whole different experience. I suspect and I expect that Ryan Cohen and his people are going to attract some very senior people and are already from competitors like Amazon and from Chewy. They're bringing people into GameStop to begin the conversion of the company from a brick and mortar company to an online retail company. And I expect a lot of announcements to be made going forward by GameStop as they progress over to that e-commerce platform. I think that GameStop will have a number of websites that they'll be running. There'll be the retail core selling website area, but there will also be the gaming area. There will likely be digital downloads available through GameStop. There will be esports created as well. Major gaming celebrities, those who are really well-known gamers on Twitch and other platforms, I think are being approached by the GameStop company right now for partnerships. And I think you're going to see a whole community explode online with GameStop and these individuals. And this is going to be a global phenomenon. We're not talking just the United States gamers or Canadian and US gamers. I think you're going to see gamers from around the world become a big part of the GameStop family going forward, because there's a whole new atmosphere and attitude being put together with GameStop and its future marketing endeavors. Keep in mind, there are about 2.4 billion gamers out there. 2.4 billion. This company, GameStop, has had 5,000 retail stores in operation. The plan, from what I'm reading now and learning now, is that they are going to reduce their numbers of stores as their leases run out on a natural deal. So every month, more stores' leases run out. They're going to let them close out, especially their underperforming shops. And I think they're going to end up selling blocks of stores in various countries in which they operate to operators who are based there and are going to run the retail operations going forward. It could be that GameStop still supplies these retail stores with merchandise so that they have merchandise to sell at the retail level, and they'll still be part of the GameStop family, but something tells me it'll be more of a franchise relationship, arm's length relationship. In effect, GameStop will be paid quite a bit of money to sell off the rights to these shops and still supply the shops with merchandise with long-term supply agreements through their existing distribution system. It will be interesting to watch and see how this works out. But I have read pieces where analytical pieces and other pieces that say that if GameStop is successful in selling off their Australian, New Zealand, UK, and Europe divisions, they'll bring in between $500 and $600 million in cash. The thing they will definitely do is they will reduce their overheads, because right now they're handling 5,600 leases, or were anyway, for 5,600 different stores. Each store had its own lease with its own mall operator. They were dealing with 5,600 or I don't know how many city taxes they had to pay. They had employees at every one of these stores. They had the payroll to figure out. I mean, it was a major logistical feat to run a company with that many stores globally going forward. Anyway, as they reduce that number down and shift over that operation and all those logistics to the new operators, they will only have one thing to really worry about, and they'll just be delivering merchandise to these shops, to the operators of these stores on a bulk buy basis going forward. And now GameStop will have way fewer employees globally that they're dealing with. They won't need as many lawyers to handle all those documents, those legal lease form documents. You talk about 5,600 stores every week, 100 and something stores every month. I mean, 100 something stores were expiring their leases. It's insane. Most leases are 5 years long, so you can imagine how many leases were expiring every year. They won't be doing that anymore. They'll be dealing with maybe 1,000 stores between the US and Canada. They'll likely turn them into super centers, kind of like what Apple stores look like. I can envision that as their future. Bigger stores, fewer, maybe one per big city instead of 15 stores per big city. And these stores will become hubs for gaming tournaments, for digital online acquisition, promotion of new games that are coming up, displays, purchase of existing hardware, used and repairs. I think that the super centers will still do that, but instead of having 15 small little tiny locations, they might have only one or two per large city going forward, and they might be down to only 500 stores in 3 or 4 years. The bulk of their business will be online. That's where the money's coming from. They're going to be bringing in advertising revenue from their websites. All of these gaming companies that want to promote their new games are going to advertise on GameStop's websites to get at the 2.4 billion potential customers that GameStop will now go after. They're not going to go after just their own 55 million members of their Power Up Club. They're now going after billions of gamers around the world, and they're going to bring in, I think, serious, well-known international gaming all-stars as in-house spokespeople for the GameStop family. This could be most interesting. As this news starts to permeate out to analysts and vloggers and stock followers and you name it, other YouTubers that follow GameStop shares from time to time, this will be the new message that GameStop will be known by. This is the new story that the company will be known by. And I think then what will begin to happen is Wall Street analysts who recommend stocks to their brokerage firm clients, they're going to start writing up stories about GameStop, analytical reports that will be completely different than they've done in the past. In the past, they've always talked about GameStop as a failing brick and mortar company. That talk is over. The new GameStop will be the up and coming GameStop e-commerce company. And now you can compare GameStop's sales, margins, and profits to other online sellers. And to give you an idea, going back to Chewy, which again was co-created by Ryan Cohen and others, that company is a publicly traded company, doesn't make money. They are valued on the stock exchange at 40 billion American dollars. That's the market cap of Chewy. GameStop right now at $50 a share is market capped at about $3.5 billion, not even 1/10 of the value of Chewy. And GameStop, I expect, as they shut down their stores, take their cash, convert over, they will be profitable very, very quickly. They will be profitable. The question is how profitable. But the fact that they're going to be compared to other online sellers, e-commerce sellers, on a head-to-head basis, I think GameStop will be miles down the road with brand awareness, in-house clientele that they've had for years, if not decades, global presence. They're still supplying merchandise to the stores out there that they're not running anymore. They're still making margins on that, the wholesale level. They're going to solidify their relationships with Sony and Microsoft and other producers of product. And the analysts out there are going to go, this is the whole new company. This is the whole new thing. We're going to start having to quote this company's potential by the factor of their sales rather than just a PE multiple on possible earnings, because a lot of other e-commerce companies that trade out there are trading on a multiple of gross sales versus net margins. Because e-commerce companies are given a long runway to make it into the profit zone. But even having said that, Amazon, which is a $1.6 trillion online powerhouse, global leader, they're trading on their shares at 3,200, 3,300 a share. They're trading at 80 times earnings. They were trading at 95 times earnings a couple of weeks ago before their latest numbers came out. GameStop, if they're making $5 a share a year or two down the road, which is only a $350 million profit, there's only 70 million shares outstanding. There aren't 7 billion shares outstanding. There's only 70 million. They generate $350 million in profit a few years down the road, or expect to make that kind of money, trading at 80 to 100 times earnings. That's a $350 possible stock value on the open market. That's where analysts will say it's heading. If this company can do the kind of sales they've did in the past, where they were doing 8 to 10 billion a year in gross sales through their retail stores, if they turn that around now and are producing 4, 5, 6 billion in sales online globally, and on top of that, they have their tournament play and their e-commerce play on top of that, they could well be over $1,000 a share by the multiples. And that's what long-term investors are looking for GameStop. That's why I think the Ryan Cohen people and others are in the stock now, are in the company now. They know the future of this company is no longer going to be tied to that blockbuster handle that they've been given, that so-called reputation of being a blockbuster that's just about to die. They're getting rid of brick and mortar, going into online, and they will move forward and become very profitable. Their costs are going to plummet on every sale they make. Their margins are going to dramatically increase. And that's why I think GameStop can be a long-term winner. But in the meantime, you got to wait it out, and you got to take your position somewhere. Either you're in the stock now, and you'll either average down if you bought it at a higher level, you bought it lower and you're at 50 and you're going to wait it out from here, or you're never own the stock. You're going to pick some up in this range here, 45, 50, 55, wherever it goes, and you're going to sit back and go, okay, show me what you can do. I'm in here. I'm patient. I wish I had bought Amazon 20 years ago when it was $50 a share. I didn't. I was a kid. I wasn't even old enough to have the chance. Now I have the chance to do a ground floor investment in an e-commerce company that's evolving into this level with a brand name that is known the globe over by many, many gamers. It's a head start that that Amazon never had, that Chewy never had. This company doesn't have to pay billions of dollars to market themselves to become known as a provider of gaming systems. They're already known for that. They're just now going into the online segment instead, the e-commerce segment. There you go. There's my story of the day, my video of the day about GameStop. We'll keep updating you on GameStop stories. Many people are being hired by this company, out of Texas, to convert them into an e-commerce company. And we're in the middle of a pandemic. Don't forget that. They're doing this while we're in a pandemic. Once we get over the worst of it with people getting inoculated, things will speed up even faster. And I think the opportunity is there to score a nice long-term gain on this stock. So up to you to decide whether to get it or not. In the meantime, thank you for joining me here. I appreciate those of you who watch me live daily, 1 hour before the opening of the market on the New York Exchange, and 2 hours into the session. I'm live 3 hours in the morning. I'm live 2 hours in the afternoon, 1 hour before the close, 1 hour after the close. And once in a while, we bring out a video like this as well. Thank you for joining me. I hope you liked the video. Give it a thumbs up if you do, and we'll keep you posted on the future of GameStop and whatever else is happening out there. In the meantime, take care. We'll talk to you later. Bye for now.